It's morning of 21st of February. It's a Thursday, right? There's not a lot that gets me excited in these markets lately. Not a lot. Forex markets have been really dull. But I have got butterflies in my tummy because there looks like a good opportunity. Gold and silver have been markets that I've enjoyed lately. They've been easier than the others to follow, and I think we've had a few good trades out of them. I think that's fair to say. Now, gold went up to my 13.46 target and topped exactly there. I'm actually looking at silver at the moment, so let's start with silver. Right, silver's very clearly in a bear trend. There's your bear trend. Has been in a bear trend since 2011. More recently, well, on the monthly chart it looks sideways. On the weekly chart it won't look quite so sideways. But why am I showing you the monthly chart? Because the 200-month moving average is at 1644, and you can see just from these spike lows, 1610, 1630, 1630, 15. Well, that's a bit lower, but anyway, around the 1610, 1630 level, you can see just by eyeballing these candles that there is resistance in that low $16 area. Where did we get to yesterday? We got to my target of 1620, 1625, which was my selling opportunity. Right, so there's a lot of reason to believe that silver could reverse from the low $16 area according to the monthly chart. Now we look at the weekly chart. Here we find the 100-week moving average at 1618, the 200-week moving average just above at 1633. Another good reason why silver could halt. And the 100-week moving average has certainly done a fairly decent job at times in the past. So it capped the last two peaks anyway. Very overbought on the weekly chart, so there's another good argument why silver will turn around. And as you can see on the silver weekly chart, there is more of a case of a bear trend, certainly since Q3 of 2016, when we topped out after a small recovery. But even on the longer term, it's very clearly in a bear trend. So we've got to stick with the bears and be looking for selling opportunities on a strong rally. Okay, what do we see on the daily chart? Silver has topped exactly at the 500-day moving average. That's the green line you've got here. 1619, 1620. That candle is not the most bullish candle that you're going to want to see if you're long. The spike up, close near the open, shooting star. And if you notice, a less bearish candle previously, but we've got a potential double top here. So the arguments are really stacking up for silver to have topped and a significant sell-off to follow. Let's have a look at gold. Right, gold, as you know from earlier videos, we had a lot of resistance at 1326, 1327 trend line, 500-day moving average. It halted there initially on this week when we topped at 1326. We got some good shorts out of that. Then we got long and the low $13 area, 1303 or whatever it was, 1301. So gold's been working really well for us. We tried shorts again at 1326, 1328, but we got stopped above 1330, and then we jumped into a long, and we reached our target of 1346 and topped. Now I did think we could get to 1355. This is a trend line that you see here on the weekly chart, going back to right at the beginning of 2014. I thought we could at least test that up at 1355. We didn't, and we reversed. Now the daily chart shows a less than positive candle, spike higher, lower close. So that's a warning sign. I don't think that's a particularly strong sell signal yet because we're not massively overbought. But I've got that silver market in the back of my mind, which does look negative. Obviously, we don't have a double top in gold. So gold is definitely stronger than silver, but there is potential for gold to top out. Now look at the monthly chart. Now I need to open this one up. Here we go. Open this baby up. Right. I'm going to take this trend line off now. It's just irritating me. We've got the 100-month moving average at 1554. Now, admittedly, it hasn't done an awful lot in the past. Hasn't had a huge effect, although on a monthly closing basis, it certainly worked at the end of 2017 and 2018. Now, there's no reason why we have to test it. We can turn around and go lower, although we're not overbought on the monthly chart either. So, gold in itself, I wouldn't be short. If anything, I think we could trickle up to 1355, 1360. We'll need to beat 1365 if we're gonna go higher, because obviously there's a lot of action going on at 1360, 1365 from the beginning of 2018, when on the weekly chart we were spiking up to these levels and rejecting them. So we might spike up to these again and reject them. We may only get to 1355, which is the peak of these candles, and obviously is the trend line that you see here and the moving average that I just showed you. So I certainly would be trying a short around 30.55 with a stop above 13.65 and see if we get a negative pattern. Okay, so to summarize, silver looks like it could seriously collapse. Gold, we're waiting to see to get a sell signal. Maybe gold will just trade sideways for a little while. Right, the other thing that's getting me very excited is the DAX. The German market, well, most of the European markets have not been able to follow the US stock markets higher, but I think that's about to change, and I would not be surprised to see the European markets outrun the US markets, and I wouldn't be surprised to see the US markets slow down or even stall and the European markets catch up. Nice inverse head and shoulders pattern. You know all about this from my earlier videos this week. Well, we're already holding nicely above the 100-day moving average, which is significant because we've not been above there since, well, we tried to break above there July 2018, but we certainly haven't been above there since. We tried it. We had another go on the 28th of August 2018. Since then, we've held nicely below the 100-day moving average, and we topped there again at the beginning of February. So now that we've broken above the 100, I think that's significant. Now that we've broken above the neckline to the head and shoulders, that is a buy signal, and we're even above the 38.2% fib at 11,383. So this could really, really roar. I know we're heading into overbought territory, but that doesn't matter. We can stay overbought for an awfully long time. I really think this could go. I wouldn't be at all surprised to see 11,850 to 11,900, and I wouldn't even be surprised to see 12,300, which would take us up 1,000 points and give us a very tasty profit. Obviously, it's going to take weeks to get there, but if you like a swing trade and if you're able to hold on to a position, this could be the baby for you. Now we're through the neckline to the head and shoulders, which never really worked. The head and shoulders pattern on the weekly chart never really worked, and we are trying to push back above the trend line, which is at 11,386. So in fact, we're holding above there as I speak. Can we get through now the 200-week moving average at 11,467? Yes, I think we can, and that will be another buy signal. So if you're already long and you're looking to add to longs, you want to buy on a break above 11,470. Then we're going to have to get through this peak, which is 11,566. But I don't know. It's a gut feeling as well, but I do think that this is going to go. I just think the European stock markets are going to catch up with the US. We're going to finish up with a quick look at oil. Oil is obviously in a bear market, according to what we've seen since, just checking, since October 2018. We've managed to get back above 38.2% fib, which is bullish, but we've run into the 100-day moving average, the blue line at 57.16, and we've also got the green 500-day moving average at 57.90. So this area could be strong resistance. You can see this channel, or this upper trend line anyway, is also holding. There's a lot going on in that 57.15 to 57.90 area. Just as we get overbought, let me get rid of that. I was just showing some divergence there. And on the weekly chart, we've got the 500, well, we've got the 100-week, moving average up at 58.28. So it's a little bit further up, and that's not particularly significant. Hang on one second. I just wanted to check the weekly chart, but the monthly chart, I don't use anything significant there. Okay, so if you fancy a swing trade, it could be worth selling oil. We're going to have to get above 58, let's call it 58.50, to be in the clear. So if you fancy a short and you don't mind risking 100 to 150 pips on a swing trade, it could be worthwhile, because certainly on a weekly chart, we would have our first stop at 56.0055.80. So that in itself is offering 100 points or so. But obviously we've got much further potential downside being in a bear trend, and there's no reason why we can't really get down here around the 50. Where is that? That's around the low. That's around the 51 dollar area. So risk reward wise, it could be worth it. There's not many swing trade opportunities at the moment in these markets, certainly not in the forex markets. So I thought I should point these ones out to you.